Hello, Market Club members everywhere. Adam Hewson here, coming to you after the historic vote in London. Yes, they're leaving the EU. And as a British subject for many, many years, I was born in England. I think it's a good thing. I think the bureaucracy is just killing innovation, and you cannot have another country give rules for a sovereign country. That just doesn't work, in my humble opinion. But having said that, the Brits were smart. They voted out. Yes, there's probably going to be some chaos. There's going to be some. Cameron's going to have to resign if he hasn't done so already. And we're going to see the markets have some really interesting moves. First of all, we're going to see a lot of pressure on the equity markets today. And I've already drawn in the Fibonacci retracement levels. We're looking at the S&P 500. You can see around the 50% level, which is 1974. And 61% is 1940. So these are the areas we would expect the market to come down to in the weeks ahead. I think that could happen pretty quickly given the liquidation and the fact that the markets closed pretty close to their highs the day before. And I think a lot of people got sucked in with that action. So we've talked about this all week about being careful. You have 200 plus days to trade every year. You don't have to trade right before a major referendum. Only the third that's ever happened in England. So that's how important it was. But it's a big, big deal. And things are going to change. I think you could see other countries, mainly Italy. A lot of people want to break away from the EU and Italy. Some other countries, Spain and so forth. They are just, this could be the start of a real change in the environment in terms of the borders and so forth in Europe. I don't think anybody wants to have free borders anymore. I think people want to control who is coming in and out of the country, especially in this crazy world that we're living in. But let's move on. Pretty much the same picture in the Dow. However, the difference there is the fact that our trade triangles, we put them on, you can see we have been neutral on the sidelines. So we avoided this huge drop. And that's why the trade triangles, more times out of not, they get it right, and you should really pay close attention. So that was a situation where we're on the sidelines. You can see the red trade triangle there saying stay on the sidelines. It had no clue there was a major referendum going in London. It didn't matter. You go with the flow, and the flow was saying stay on the sidelines. So again, we can see this market coming back down. The Dow could trade back to 50% retracement at 16,822, and a 61% retracement is 16.5. So we come down here without too much difficulty, in my humble opinion. So let's see how that plays out. This is the NASDAQ. We've been talking about the NASDAQ for some time now, how it just seems to be rounding out this big sort of top, like right here, just kind of rounding off. And we're looking for this market to come back down to a 4,583, which is around about here. That's a 50%, and the 61% retracement is 449, which is right around here somewhere. So I think we could see this market come back down. I think obviously today's going to be a lot of pressure, a lot of emotional trading. Be careful. Just don't get too excited about things. But this seems to be, if you look at this top, it's been going on really from this period on, and that's quite some time. That just wasn't a couple of weeks, wasn't a couple of months. It's over a year. It's been sort of creating this huge top in the market, in our opinion. So let's see how that plays out. But generally look for softer prices in equities. This is a bright spot, and that's the gold market. We've talked about this before, and also how important this 1,300 level is. And we're just going to draw a line. You've seen me do this numerous times, so it's nothing new. So we have like a triple top here. We've just broken through there today. And we're looking for a move from here, these lows, all the way to here. And that's going to be quite a move. You're talking almost 250 points, so 1550. And our target zones for gold, if you look at our Fibonacci's levels, are going to be, first one is, I'm going to write this on the screen so you can see it. First target is a 50% target zone, and that's 1430. The next one is a 61.8%, and that is going to be 1516. So we're looking for gold to go up at least another couple $100 in the months ahead. So it's very, very bullish in our hand. This is a huge base it's coming from, and it's capable of carrying this market much, much higher. So don't be put up by the fact that it's dramatically high today. It can still go quite a bit higher. Here's a couple of mining stocks you may want to look at. One's Newmont Mining. We like that. NEM is the symbol. And the other one, we've talked about it before. We just talked about it this week. That's Barrick Gold. Barrick Gold, we can see this going high. This traded as high as $55 when gold was in its high. And you can see we're quite a bit below that now. We're going to open up considerably higher, maybe a couple of dollars higher. But generally speaking, this looks like it wants to go higher in our opinion. So look, two stocks for you. Plus you can trade spot gold or gold futures. And they both look like they want to go higher. This is interesting. This is crude oil, where you actually had a signal to be short on the 22nd at 48.72. And we're going to open quite a bit lower than that today. There's the weekly there, 47.88. There's the daily, 48.72. This is another one the triangles got right in a big way. So just remember, pay close attention to the trade triangles. They do work, and they'll make money for you. Hey, I'm Adam Hewison. Thanks for stopping by. There's going to be a lot going on today. Be careful, be careful, be careful. That's my key word today. And I'll be back next week. So have a great weekend, everybody, and stay true to those trade triangles. And if you want to leave a comment on our blog, we'd love to hear from you. Thanks for watching the video.